We are live. I'm replacing Neil's intro statement. We're officially live on the LeoFinance Weekly AMA. Today is Tuesday, June 28th. Obviously, Bitcoin's been trading sideways. I would say we could just jump right into like Bitcoin and kind of talk about crypto markets. As people
we
kind
can
of jump
certainly
in
do that.
in.
Did you get the announcement out and whatnot?
Yeah.
I feel like we always like get rolling into things before we have the folks
Absolutely.
around. I should probably get into Discord. But yeah, those listening on YouTube or to the recording, welcome to the slow dance intro where we start recording and go live before we really start recording and go live.
Yep.
Let me plug in my phones here and get on the Discord chat. For those of you listening on other outlets, you should join the LeoFinance Discord server. And not only can you get random knowledge dropped on you in the general chat, but you can join on the AMA voice chat and listen in and ask questions in the AMA text channel.
Absolutely. Looks like we're not live yet on Facebook, but should start shortly. I also have news about YouTube. We might be able to go live next week. We'll see.
With the new channel or the old channel?
This is with the new channel. I'm still working on the old channel to try to get it back, but YouTube is notoriously shitty about stuff like that. So
yes, the worst.
We'll have to see. We'll have to see.
All righty, I'm gonna go into general.
But yeah, we might not have Facebook for this one. We'll see if it just says connecting. So I don't know if
interesting
it changed anything.
I've been forgetting to even look at the Facebook while we're live, but apparently there's one or two people in there. I think it's usually one of my normies. I think Steve. I think Steve last week put a comment in there. It was either him or Mike.
That's funny. All right. Well, we'll just do it with Twitter and Discord today.
Check out. See if we had questions. Well, I'm pretty sure I'm not going to be writing a in-moment recap post since Neil's not here.
Might have to do it from memory.
Do it after all. And the funny part is I don't have time after. So by the time I get to it, it'll be tonight, and we'll see how much I actually remember.
Yeah.
Oh, although you know what, I could put in just like bullet points. I can do a draft post and put in bullet points, and then go back. Just
put in like a one word to remind yourself what we were talking about.
Just like I'll put like the topics.
Yep.
Speaking of LeoFinance, just fully populated for me. I didn't change nodes or anything.
Yeah. So, all right, let's get to the crypto markets after. We could do a little segment on Leo stuff since we've got kind of a lot going on right now. If you tried using the site this morning, obviously it was pretty difficult. We had to deploy some fixes. Obviously, the Hive price went kind of ballistic in the last, what was it, like 24 hours? We went from 35 cents to 65 cents. Right now we're sitting at 57 cents. Obviously, when that happens, we get a lot of volume, a lot of traffic coming in. So there's a lot of volume on the, on the trading bridges, like, every bridge, like BLeo, PLeo, WLeo, P-Hive now, PHBD, everything just kind of goes crazy when market moves happen like that, especially when it's, Hive going up 60% in a day. So obviously that's an exciting thing to see, but then you also have some kind of nuclear fallout from stuff like that, which is, Lightning gets kind of overloaded and LeoInfra starts getting overloaded. And then, we basically gotta clean out the servers and scale up. And there is some positive news to things like this happening, which is that it lets us test scalability and obviously improve our capacity for handling, large volumes of traffic kind of coming in suddenly and surprisingly. So it is really good to have stuff like that happen, which is kind of a good segue into threads. So threads, I kind of teased the idea in Discord last week, over the past week. And essentially the idea behind threads is kind of a proxy Project Blank. It's almost like us releasing Project Blank in open beta through LeoFinance. So by doing that, we're able to test the scalability of things like LeoInfra and Lightning and kind of their ability to handle Project Blank. Because a lot of people like to ask when Project Blank, and I always like to say soon. But the real answer is that we're building all of the infrastructure for Project Blank, and we're kind of on this long journey of adding stuff to LeoFinance that ultimately is kind of the bare the necessities for Project Blank. You need those things to be the base layer before we can basically release Project Blank and have a good working product when it goes live. Because having things like downtime and site issues and scalability issues are not going to be fun when Project Blank goes live. So I definitely anticipate that we'll have some issues like that, but at the same time, I think that there's a lot that we can do now in terms of testing and scalability on LeoFinance that will ultimately lead to a better user experience on Project Blank. So that's kind of where the scalability conversation goes, is that we're always testing stuff and releasing better infrastructure. I always see people tweeting and stuff like that, asking what's the latest with LeoFinance, and usually we just link them back to the @LeoFinance account, where there's probably like 3 to 4 updates a week in terms of posts on what we're working on. But that's kind of just the more glamorous stuff. The less glamorous stuff is that we're always pretty much on a multi daily schedule with different developers. We're always improving infrastructure and looking towards the future of sustainability and scalability for everything. So LeoFinance.io is not like a simple web app. It runs on Lightning and LeoInfra, and it's super complex. And when something goes down, we essentially have to run like a huge diagnostic scan and see what it was and how we can fix it, both now and in the future, because we can always band-aid stuff, but increasing the scalability is how you fix stuff for the future.
Indeed.
My free BTC has a question. He said, I have to leave soon, but I'll watch the replay. Question 1, how vexPoly, how will it work? I stake 1,000 PolyCUB there and it is locked for 2 years. After that, I have to commit to 2 additional years to keep the extra voting power plus additional interests. So the way that vexPoly works is pretty interesting. So vexPoly stands for voting escrow xPOLYCUB. And essentially what that means is that you're putting your xPOLYCUB in a escrow voting contract, where in that so basically, let's just say, use his example. He takes 1,000 xPOLYCUB. So his question said PolyCUB, but it's actually xPOLYCUB. So you take 1,000 xPOLYCUB and then you stake it into the voting escrow contract. And then you receive 1,000 vexPOLYCUB back from that contract. And the 1,000 vexPOLYCUB basically has 3 times governance power. So if you have 1,000 xPOLYCUB, so I gave this example on the last AMA, I think. If you had user A with 1,000 xPOLYCUB, user B with 1,000 xPOLYCUB that they staked into vexPOLYCUB, so now they have 1,000 vexPOLYCUB. User B would have 3 times the governance power that user A has. So they would have 3,000 governance power while user A has 1,000. And then on top of that, there's like he said, like the additional interest that you earn in that vexPOLYCUB contract. So basically by locking your xPOLYCUB for 2 years, you're getting that amplified governance power, and then you're getting more yield on the platform. So you're getting that amplified yield that we always talk about. And kind of the reason behind that is that, for the people who stake xPOLYCUB as vexPOLYCUB, they're kind of signaling that they, have this long-term belief in the platform. And then, the ultimate signal that they're putting out is that they have skin in the game. So, the value of the PolyCUB platform, is kind of contingent on them, basically being in that contract for 2 years. So 2 years is basically an eternity in crypto. Actually, LeoFinance's 3-year anniversary is in like a week. So, 2 years is a super long time. That being said,
3-year anniversary, huh?
3 years.
Man, what did I do with the last three years of my life?
Yeah, 3 years
That's
has
cool.
flown by, but it also feels like 30 years.
Definitely need to have some kind of I don't know, celebratory post and whatnot.
Absolutely. Yeah, there's going to be some celebrations.
LeoFinance, tell your LeoFinance story, your 3-year journey.
Yep. We'll have to do some fun stuff. But yeah, so the 2-year escrow contract, and if you want like a simple way to understand it, essentially look at PolyCUB and xPOLYCUB as being equivalent to xPOLYCUB and vexPOLYCUB. So the vexPOLYCUB contract actually works very similarly to the xPOLYCUB contract in that there's a PolyCUB to xPOLYCUB ratio. So right now that ratio is like 23 or something. So that means that there's per 1 xPOLYCUB, you have to stake 23 PolyCUB. The same thing is going to happen with vexPOLYCUB, where when vexPOLYCUB is released, it's going to start at 1 vexPOLYCUB or 1 xPOLYCUB per vexPOLYCUB. So you'll be able to stake 1,000 xPOLYCUB and get 1,000 vexPOLYCUB. But as time goes on, if you stake 1,000 xPOLYCUB, you'll get like 992 vexPOLYCUB. So the value of xPOLYCUB per vexPOLYCUB is always going to be changing. It's always increasing. So essentially, it's always going to take more xPOLYCUB to get 1 vexPOLYCUB, and that ratio obviously starts at 1 to 1. The way that works is.
What's the mechanics in terms of like the ratio changing?
So the ratio changing is based on the yield. And so essentially, this is where things get really interesting, because the idea behind vexPOLYCUB is that you'll be able to stake your xPOLYCUB, and essentially you'll be able to buy PolyCUB, stake it as xPOLYCUB, then stake it as vexPOLYCUB, and earn a fixed interest on that vexPOLYCUB. And that fixed interest, depending on some mechanics and governance votes that we have to put out, that fixed interest rate will be something like 10 or 15% or maybe higher, depending on what the governance decides. And there's a couple different ideas behind that, and I haven't really released any posts about it yet, but essentially this is all going to be determined by the governance voting, which will determine how much yield it should get and where that yield should come from. My free BTC is asking, and after the 2 years I get the xPoly back without having to interact with it. So no, so you'll stake it. So like, let's say you stake it on day 1, 2 years from that day, you'll be able to unstake it at any time you want, or you can leave it as vexPOLYCUB. So obviously if you leave it as vexPOLYCUB, you still have that governance power, you still have that yield coming in, but you can withdraw it at any time after the 2 years have already passed. And that's on the first deposit. So like, let's say that you deposit 1,000 xPOLYCUB into 1,000 vexPOLYCUB on day 1. Then let's say on day 365, so exactly a year later, you stake another 1,000. After 2 years from the first day, you can unstake the first 1,000. But then 2 years after that second time that you staked, you can unstake the next 1,000. So it works very similarly to like harvesting and the claim lock contract. But obviously it's not the same. It's a very simple timer. So it says, user deposit. If you read the contract, it basically says user deposits xPOLYCUB, and then a timer starts for 2 years worth of Polygon blocks. And after that amount of blocks has elapsed, then the user can withdraw whenever they want. And that's essentially how it works.
Cool.
But yeah, there's going to be a whole post, and there is a new. So actually, it's public service announcement. We updated the whole docs for PolyCUB, so there's all sorts of new pages on there. One of them talks about one of them talks about the vexPOLYCUB contract and a little bit of how that works from like a high level. I'll link it in Discord. And you can read that if you want to kind of get the high level overview. It's a lot of what I just said. And then kind of the nitty gritty details will be in the launch post.
And then I guess to go another step with that, is this where the potential for collateralized lending comes in?
Yeah, so collateralized lending is kind of one of those big ticket items on our roadmap, where you'll be able to stake xPOLYCUB or vexPOLYCUB and take out a collateralized loan. So essentially the way that works, and I think we put out in a post and we talked about it in the AMA probably like 3 or 4 weeks ago. But I've been talking with a few people, you know, Addicted, Taskmaster, about collateralized lending and what the best model is for that. And this is an interesting conversation now because you see all of these different platforms kind of collapsing, like Celsius, you know, and then 3AC, the crypto hedge fund. They're all kind of collapsing because of these loans that they've taken. And they've basically, the short story is that they've taken loans against their crypto, and then they've used it to buy more crypto. So they've levered up in a really big way. The problem with a lot of these loans that they took is that they were actually under collateralized loans, and some of them were actually unsecured loans. I saw a story about this platform, I forgot the name yesterday, but they basically came out and released a statement that they had a $68 million, I think, unsecured loan to a famous crypto investor, but they didn't name who it was. And this is supposed to be a DeFi protocol, which is kind of interesting because that's clearly not DeFi. If you can loan capital to somebody and not disclose their name, but you know the name, that's pretty centralized. So anyways, they had this unsecured loan, and then, you know, that's like a whole story we could get into, but they basically released a token to tokenize the loan, and now they're trying to re-raise the funds. And it's like the ultimate crypto degenerate scheme that they've set up, which is just really funny. But you know, I got off track, but the idea is that we've basically seen all these different collapses of these platforms with these collateralized loans and under collateralized loans. So, you know, something I've talked a lot about with Addicted and others is, how do you create a collateralized loan protocol that doesn't have this blow up risk that a lot of these different platforms have? And there are plenty of examples of platforms that don't have blow up risk, or at least have not blown up yet. And that's like MakerDAO and a few other platforms like that. So MakerDAO is like the biggest lending platform in the world, and it doesn't have it hasn't had any issues, and they talk about the health of their loan economy all the time, and how it, you know, it's not failing and it's not having any issues in spite of, you know, pretty much every other platform collapsing. So with Addicted, I've talked a lot about how this collateralized lending model would look like with PolyCUB, and where I think, and he agrees, that it gets interesting is that we would have highly over collateralized loans. So let's say, and this could be determined by governance, it can also be determined by, you know, kind of key Oracle mechanics in terms of, you know, loan health and how much is loaned out at any given time. But essentially, you can have a super over collateralized loan, so you can make it really safe. This is what MakerDAO does too. They have, you know, you can choose your own collateralized rate, but then you can get liquidated very easily. So something kind of like that. But essentially, you have a lot of collateral posted for a small loan. So say that someone posts $10,000 worth of vexPOLYCUB into a collateralized loan contract, and in exchange they take out like a $2,000 loan. The price of PolyCUB can drop, you know, by a factor of 4, and essentially that loan is now in danger of being liquidated, but that user will have plenty of time to add capital. So then that leads us into two mechanics that I've thought of to make the loan protocol safe. The first is having basically a moving average price feed for loan liquidations. This gets into some really interesting game theory, where basically what happened with a lot of different loan protocols is that people crashed those protocols knowing that it will tank the price. So they, on the big ones, they can actually borrow assets like Celsius, and then they can crash the protocol and essentially they just short sold Celsius. And now they're just making a killing by crashing the whole protocol, by liquidating everybody. So by having a moving simple average price feed, you basically remove that risk, because someone can come in and start attacking the protocol and short sell it and try to make a huge profit. But then everyone else who's got loans can buy up the price and make sure that the price feed doesn't reach liquidation for them. And essentially what it does is it gives people time to react to something like that happening. So they can either pay back their loan and withdraw the collateralized loan that they have, which would obviously make them free from that liquidation crisis, or they can actually like defend the whole system and start buying up PolyCUB that's now being basically dumped in terms of price by people trying to crash the loan protocol. So what it does is it removes that like blow up. If you ever see those like big wicks on Bitcoin and other cryptocurrencies, like, I forgot the major one that happened in March was when we dipped down to like $3,000 Bitcoin. But obviously we dipped down there for like, a couple of minutes, maybe even a couple seconds. And what that is just cascading liquidations, crashing the price. And half the world is sleeping when that happens. And having a simple moving average would completely avoid that. Then the second part to that is having the bonding protocol be the way that assets are sold. So if you go back to one of Addicted's posts from a few months ago, probably, he was talking about how he's really bullish on this idea that with bad debt, so bad debt being a loan, let's say that Mitch takes out $1,000 loan against his $3,000 worth of vexPOLYCUB. The price of vexPOLYCUB drops and now it becomes worth $800. That loan would have been liquidated when it became worth $1,000, or potentially even higher if governance sets a more safe and secure kind of protocol mechanic for it. But let's just say it gets liquidated at $1,000 when it reaches parity. Then the protocol, instead of just dumping that PolyCUB on the market, which is the bad bet, so it's dumping the PolyCUB in order to get back, it's trying to make its $1,000 loan back. Instead of just dumping it out there, which creates that cascading effect, it would actually deposit it into the bonding protocol, and the bonding protocol would sell it back to the market potentially at a discount. The thing that does is that instead of just going to the market and just dumping it, which dumps the price even further, which causes more liquidations, from people that aren't Mitch, but other people that took out loans who had a better liquidation price than him. What it does is it puts it into the bonding protocol, and now the bonding protocol sells it over the course of like 3 months. So over the course of 3 months, that bad debt gets sold off slowly. And that kind of creates some interesting game theory as well, where if someone tries to come in and crash the PolyCUB price, you've got like these two kind of key defensive lines, where the first is that you've got this moving average, which will prevent pretty much, I would say 90% of liquidations can get prevented by a simple moving average, which is, if you're, and pretty much everyone on here is familiar with Hive. Hive works with a price feed average on content rewards pool. So just look to that as a great example. That's basically what I modeled it after. It has like a 3.5 day moving average. So that's like your first line of defense, and it will defend probably 90% of these loans. The other 10% are the ones where people might not be paying attention. Someone might be on vacation for like that 3.5 day period of time, or, say that the protocol gets attacked very heavily, continuously over 3.5 days, and people aren't able to defend it. What will happen at that point is that there will be liquidations of maybe the other remaining 10% of vaults. And that 10% of vaults will get migrated to the bonding protocol, where those assets, the vexPOLYCUB, can essentially get sold off over the course of, say, 3 months, 6 months, or 12 months. And that creates your second line of defense, where instead of cascading liquidations, you have that liquidation happening very slowly on an extended period of time. So if you take a big step back and look at what we're talking about, really the key to solving this whole liquidation crisis issue is extending the time between that it takes for something to get liquidated. That's really the solution to all of the liquidation problems. And then obviously not to collateralize yourself beyond what you can afford. But
Like
the thing about
it's
crypto
almost
is
like,
that people always will.
yeah, well, fear and greed, two biggest human
Crypto
emotions.
degens, even when you've got a $18 billion hedge fund.
Yes. It's a whole nother story about, the levering on top of levering, which is a conversation I had yesterday with a guy I know through real estate that, does a little bit of crypto, and we caught up, and, he was kind of getting my vibe about the market. And I was like, well, I'm just waiting for the, over leverage purge to finish. I don't know if it already has or if there's more to come. I was like, but obviously 3 arrows, Celsius, those are classic examples. I don't know if there's more out there. Kind of feels like there is, but at the same time, if crypto kind of holds where it is now or even bounces a little bit, maybe that gives everyone enough time to save face that is still remaining. But, it's pretty funny because you're talking about like extending the timeline, so to speak. And it's like kind of like flattening the curve, so to speak. It's right, it's like mask up and stay in. Let's flatten the curve. Will it work? Potentially. Will it definitely make things better? Absolutely. Does that mean that there's no chances of a blow up still? Well, probably not, because anything's possible, but it's definitely doing a service in terms of trying to curb that, so to speak. But yeah, because from an end user point of view, I look at collateralization like, all right, sweet. Like I have xPoly and I don't plan on selling it anytime soon. I actually don't ever want to sell it, but at the same time, I'd like access to that capital. So being able to borrow against it is huge, even if it is a lower loan to value. Like me personally, I wouldn't borrow more than 50% loan to value anyway, even if it was available, because you can see a 50% drop in price in a matter of days. So it definitely needs to be conservative. On the flip side, people are funny. When you can only borrow 30%, people literally sometimes just don't even borrow because they're like, I can only get 30%. What am I going to do with that?
Yeah.
So it's funny. I mean, I personally would still borrow against it because I can put that money to work, especially in something like xPoly. I'm just going to hodl pretty much for the duration. But all this stuff that's going on in the background, obviously, is not what the end user knows about or sees. But it is the $1 million question on how do you prevent the cascading effect of liquidations and theoretical, price dumps.
Yeah.
So,
and a big factor too is, when you look at, and you can study something like MakerDAO and look at, how they've survived all these different crypto crashes. They obviously had the big flash crash of March 2020, and then, recent liquidations that have been going on with MakerDAO and every platform out there like Celsius. Why has MakerDAO been so successful in thwarting this off and actually thriving through all of this? And a lot of it does have to do with the size of the platform relative to the size of the loans that are given out.
oh, yeah.
And another big piece is that they're loaning out a stable coin that they control. So it's obviously another big piece to it. So when you kind of study this, it gives us a lot of insight on how we can build a lending protocol that is very secure and doesn't have that massive blow up risk like other platforms. The key is to not get over levered, and that's really just a basic investing principle, which is leverage is a great thing, but not when you get over levered. I think it was like Charlie Munger said something. There's three reasons why an investor goes broke: liquor, ladies, and leverage. And it's
I've
very
never
true.
heard that one.
Yeah,
I like it.
Yeah, so we're seeing that in crypto right now. You had a lot of people, I'm sure, get broke off the first two, and right now you're seeing the third one play out. Yeah. Nifty Phil said the number 4 is Luna.
It is
liquor, ladies, leverage.
That's like Munger pretty much just leveled up from the Coke and hookers line. That is epic. I like that. I mean, I'm gonna store that one away. It's true though.
Very true.
And leverage is great when everything's going up. But here's the thing. I truly believe that as a society, we now function where people kind of know shit's going to blow up and don't care because it's just like, let me just max out and make as much money as possible until the music stops. And it's just like these boom bust cycles over and over again. And I feel like we're starting to see it in a lot of different industries on a whole. So, but before we stumble into like general market type dynamics, there were some questions in regards to Leo. So Nifty actually is curious about Nailion's question as well. So have there been any advances on the ad revenue scheme? It's great to see the site evolving with communities and other developments. So maximizing ad revenue will be a big selling point for users to power up, earn, and share, or for us to bring more users to the site going forward. I think that we'll see a big increase in views this. I think we'll see a big increase in views this year, and we'll tie up with all the other. So anyway, clearly asking about ad revenue and whatnot.
Yeah, it's a good question. So this was in April, so less like something about 2 months ago. We released this post talking about the new Leo ads mechanic and how it's going to work. And it's obviously a big kind of key part of the roadmap for LeoFinance. You can see the Ethereum price was 3,200 back then. It's kind of nice.
2 months ago.
Yeah, and obviously the Leo price was 3 times as high because it pretty much tracks Ethereum. But basically this Leo ads mechanic is kind of this interesting mechanism which really fulfills the mission of our, like, what we're trying to achieve in terms of Web3. So with LeoFinance, the mission statement is, democratizing knowledge and access, financial knowledge and access. And a lot of that is enabled by Web3. And this key part of it is tokenization. So obviously tokenization lives at the core of what we're building. And we've talked plenty of times on the podcast about tokenization and kind of like the tokenization of everything. We're starting to see that really play out in a lot of different ways. Obviously, since we've talked about that, NFTs have absolutely blown up, and other forms of tokenization as well. So, in this post, what we introduced was basically this entirely, reimagined version of advertising revenue and social media, where you look at a platform like Facebook and they basically just, Facebook soaks up all the value while users create UGC, which is user generated content, which is what ultimately drives in ad revenue. But instead of sharing that ad revenue with users, Facebook just obviously, eats up that ad revenue and keeps it as their profits. So with a platform like LeoFinance, what we're building is obviously a completely different take on social media and ad revenue and tokenization. And when you combine all of these things together, you're able to create something like this new mechanic, which will basically take the ad revenue every month. It autonomously, through a smart contract, buys Leo, and then it deposits that Leo into the Leo Power balance of every Leo Power holder. So if you're holding Leo Power, essentially you're earning a share in the ads that the site generates, and it's all automated through a smart contract. And this is like probably one of the most exciting things about Web3 and tokenization that we can achieve, which is, this, if you looked at this 5 years ago, 10 years ago, probably even like 2 years ago, it wasn't even possible. And now with smart contracts and obviously the way that Leo works in terms of tokenization, it's all possible. So, when we released this post, it was really like this kind of roadmap, like this roadmap reveal of what we're kind of aiming to achieve. So I know the question was basically when, but I wanted to kind of talk about why before we talked about when. And, I hope the why is pretty clear. And that is that Web3 is not about creating a company that makes a ridiculous amount of profit. It's about creating a DAO, a decentralized autonomous organization that generates a ton of profit. And, everyone in that DAO kind of participates in that smart contract. So this Leo ads mechanic is really going to change the dynamics of using the platform, So obviously that post will go into more detail, but it really refocuses the idea of generating traffic and generating good content and bringing people in. And that's what I'm excited about. So in terms of progress, we're working on both the smart contract and the front end. Obviously the front end is extremely easy. The front end, once the contract's ready, basically we just plug in the front end and we're good. I actually showed a basic, kind of MVP in that post, where it shows you the Leo Power APY, the curation APY, and then obviously it just adds them up and gives you the total. So anyone holding Leo Power would benefit greatly from that. We estimated at several percent per year. So that's kind of just like on top of your normal curation rewards. And now that the Leo price is so cheap, it's the ad revenue would be buying up even more Leo, pretty much 3 times as much Leo every month. So things do get interesting when you start to consider that mechanic and the kind of the revolving ecosystem that we're building. Well,
I mean, that's honestly, for me personally, the mechanic I like about ad revenue is simply that it's buying Leo. Like you basically have an underlying bid, an underlying buyer all the time.
Yep.
Even if, regardless of, how much that is, it's still pretty much a perpetual buyer, which that's clearly never a bad thing. I mean, everything comes down to supply and demand. So that's a piece of demand that's always going to be there.
Yeah, essentially what it's doing is this contract will be buying up Leo every single month and really soaking up that Leo and then putting it back, because it's not distributing Leo, it's not distributing liquid Leo, it's distributing more Leo power. So basically you'll stake 1,000 Leo, and over the course of a year, you'll see that 1,000 Leo become, 1,001 Leo, 1,003 Leo, 1,007 Leo, and Leo power. So it's not liquid in your balance. So essentially what it's doing is it is creating that perpetual bid, and then it's taking what it buys and it's basically locking it for 30 days because that's the unstaking time for Leo. So that's where I think things get kind of cool in terms of a tokenomics perspective, kind of soaking up that liquid supply that's out there, which is already very limited. And then deploying it back into the hands of people who are already signaling that they believe in the platform by having Leo staked. And Nifty Phil is saying this kind of answers a lot of questions that were brought up about Leo inflation in general the other day. Yeah, so this is like a good segue into some conversations that were had in the Leo Discord channel about inflation and where Leo's at. Because basically Leo.voter is kind of like one of these core pillars of the Leo ecosystem in terms of generating value for Leo users and Leo authors and kind of incentivizing people to create good content. The problem is that the Hive price has been extremely strong in this bear market, and Leo is tracking the rest of the alt market. So this has kind of put Leo down at this really low valuation. And I do also believe that the LeoVerse kind of bottomed out. So LeoCUB, PolyCUB kind of led the market in bottoming out, a little bit more so. But even if you look at that Leo ad screenshot that I showed, the price of Ethereum was 3,200 and the price of Leo was 18 cents. And the price of Ethereum is like 1,100 and the price of Leo is like 6.5 cents. So it's tracking Ethereum pretty closely. But the problem is Hive is doing really well, and that's obviously a double-edged sword.
Wow, I mean, Hive is doing really well as of a pump 24 hours ago.
Yeah, 100%. The pump 24 hours ago definitely added to that. But basically, the questions were being asked by Trumpman and a few others about Leo inflation and how this Leo.voter mechanic is creating a lot of Leo. And there's a couple things that we've been working on in the background, given that this has kind of become a problem over the last 2 or 3 months. What we're doing is using things like LeoDex, LeoMaker, and the actual curation rewards on Leo.voter, and we're going to start buying back the Leo that's used for the Bounties account instead of just minting all that Leo. So obviously when this started, it was only a few hundred Leo per day that was being minted to pay bounties. Now it's become a few thousand because of the, you know, the price changes. So what we need to do is supplement that and get it back to a reasonable rate that was kind of predicted from the beginning. And I believe that the path to get there is to actually use the same contract that we're using for Leo ads. It's a similar contract. It's not as complex because obviously with Leo ads, it has to buy up the Leo and then distribute it as Leo power to every single Leo holder. So, you know, that's basically a daily distribution of, you know, 2,000 transactions. With this Leo bounties one, it's basically going to be, it's a contract that will buy up Leo and then distribute it to one account every single day. So that's kind of where we're headed. I think we actually started kind of testing things and doing it a little bit with some manual intervention. I think it was about 10 days ago, and I kind of jumped in Discord and I was talking about that. So if you scroll up, you can see some screenshots and stuff that I posted. But we started testing stuff, you know, about a little over a week ago, and it's looking good. But there's definitely more that needs to be done in terms of sustainability there for the bounties account. So I think we're on a good path to solving that. So I gave like 3 ways that we're doing that. Another 4th way I didn't mention was the wrapping fees on wrapped Leo, B Leo, and P Leo. So right now, those wrapping fees, you know, over the past since wrapped Leo started, so pretty much a year ago, those wrapping fees have just been held by the Oracle. They've never been used for anything. And this whole conversation kind of brought up the idea to use wrapping fees to supplement that bounties payout. So instead of creating new Leo, we're just using Leo that's being collected basically by the Leo DAO and using it to distribute for those incentives. And then taking that into account and then combining it with the other 3 things I talked about, and using the curation rewards of Leo.voter, especially with Hive being this high. I think we can solve this problem pretty easily. Yeah, I would say we're on a good path to solving it, because at the same time, we don't want to lose that. Like, I know some people were saying you just cut it off and just not do it anymore, or put a big limiter on it. You do lose that, you know, I'm sure many of the authors here know how valuable that those Leo.voter votes are. So we don't want to lose those votes either. So for me, that's kind of a key thing to keep in the community, but then, you know, find a sustainable way to keep it.
Yeah, makes total sense. And so for the complete noobs, how does one earn Leo bounties?
So yeah, so there's a couple ways you can earn bounties. Some are from like competitions, and you know, we have a new head of business development, and it's a nomad soul, and he's in Discord right now. He organizes basically every competition, every, you know, kind of coordinated effort. So like Leo Power Up Day and other things, and that's one good way to earn bounties, is to participate in those initiatives. And then the other one, yeah, the current, let me link to that actually. The current competition is it's called Bring Your Family to Leo, and it's basically a hand-to-hand marketing idea. Here's some posts about it from him. Basically a hand-to-hand marketing idea of how we can bring more people to LeoFinance, and starting with just people that we know. So you know, LeoFinance has about 650 monthly active users, which is pretty big in terms of, you know, our Web3 niche, but pretty small in terms of the rest of the world. It's like a drop in the ocean. So you know, if you can onboard 1 or 2 or 3 people that you know in person to LeoFinance, that can have a very great impact on the platform, and it can have a great impact on your experience of the platform, because now you've got, you know, someone that you know to talk about and interact with, which is, it always makes social media better when you can be social. So that's a pretty key piece. So initiatives like that, and then also if you delegate Hive power to Leo.voter, you can earn, obviously you can earn Leo. So that was like the conversation we were having before, which is how people are earning Leo, and looking for sustainable ways to keep that going.
Indeed. I have my delegation. It's been out there since probably day 1. You know, the bringing your fam to Leo is obviously a great idea, and it got me thinking about, targeted marketing, so to speak, because there's been general marketing, and obviously there was marketing for like PolyCUB in regards to just like the crypto related news outlets, so to speak. But when you think of LeoFinance, itself, the UI, it is definitely niche, and it's a specific crowd, and it might be a crowd that's even generational in terms of more so my age than yours, as long form isn't really so much in favor, with kind of the under 25 crowd. And we always talk about LeoFinance is kind of like seeking alpha on a blockchain, right?
Yep.
And that got me to thinking, like, seeking alpha is literally the warmest of warm leads, so to speak, for potential users. And it's like, how do we interact with that platform, and or kind of let seeking alpha users know that, hey, we have something very similar, except for it's Web3, and you earn crypto, and you don't have to hit any potential milestones to get revenue share and things like that. I don't know if that's as simple as some kind of ad, or if it's obviously an outreach. If there's anybody that partakes on seeking alpha, you could certainly spread the word. I personally haven't been on that site in years, and ironically because of LeoFinance. But that's kind of my point. Not that, blatantly trying to pillage another site, but the reality is, seeking alpha is the ideal client, so to speak, for LeoFinance, especially for people that aren't well versed in crypto yet. A lot of these guys are stocks, commodities, things like that. But the bottom line is, anyone that invests in stocks at least knows of crypto and has some kind of curiosity at a minimum. So and that's just an example. I'm sure there's other niche markets and websites where it's basically quote unquote warm leads, but obviously seeking alpha is the first one that comes to mind. And I don't know off the top of my head the greatest way to be able to touch that community and introduce them to LeoFinance, but I think it's definitely something that's worthwhile in regards to potential conversion.
Yeah, I think, and I have a couple ideas for that. And, maybe a Nomad Soul is listening. Would be, one big idea would be to target, say 3 authors on Seeking Alpha, and actually pay them per month to start creating content, or at least cross-posting their content onto LeoFinance. So, I mean, even if they copy and paste their content and just link to it on both sites, that would be huge for us. So maybe just doing something like that. And then the way that Seeking Alpha works is that each author kind of has their own little community. And then Seeking Alpha gives them the tools to basically release like a paid product or paid newsletter. And basically what we can tell them is they can share, some percentage of their content on LeoFinance. And they can also earn, it's just another revenue stream for them to earn revenue from their content creation. Because obviously, if they're creating content on Seeking Alpha, that's probably a big percentage. For some of them, it's their only source of income, like livable income. So, if they come to LeoFinance and earn, $1,000 a month, $500 a month, I think that they would be extremely interested. And then obviously, to kind of entice them to come over here, we could sign like a little contract. This is an idea I've been wanting to pursue with YouTubers, like crypto YouTubers and crypto Twitter influencers. A little contract for like 6 months to basically sponsor all of their content and put like a LeoFinance logo in the bottom left of their content, and then have them link to LeoFinance in their bios of everything. I think crypto Twitter is a great place. Crypto YouTube is a great place. And Seeking Alpha is a great place too, to kind of find our, 3 to 10 influencers to start kind of hiring onto the team and sponsoring. I think that's some good low hanging fruit for us. Just kind of getting these influencers in. And then with, and Mitch, you're going to love this, with, like the referral system, kind of building out this referral system that I've teased for a long time would be a big part of this, where everyone who's already here would get a referral link. And then obviously we bring in some of these sponsored influencers and they could all get referral links. So, you know, they might cross post their content and make $500 a month from their actual content from upvotes and everything. But then they might make, you know, who knows how much money from having a referral link to bringing people onto LeoFinance and taking a percentage of their earnings. So, you know, for example, they could generate a referral link where they get 5% of the earnings of every LeoFinance user they sign up for the lifetime of that LeoFinance user's account. So then you can imagine someone like, I think a guy on Seeking Alpha's name is Brad Thomas or something like that. You can imagine a guy like that who's got potentially, you know, tens of thousands of people following him on Seeking Alpha, bringing over with a referral code 1,000 people to LeoFinance, and now he's earning 5% of that 1,000 people in terms of the Leo and the hive power that they earn. He's earning 5% of all of that for 1,000 people, and you know that could stack up really quick. So there's some interesting ideas out there in terms of long-term marketing. And some of that stuff is organic, some is paid. Obviously, you know, bringing some of these sponsored influencers on would be paid. And that can have a big impact.
The beauty is, like, obviously, yeah, I mean, maybe something paid to entice them right off the jump, but then, you know, that's what's great about Web3. After that, it can really just be, you know, votes that make it worthwhile, like in terms of just, you know, that first few months, you know, that post getting hit with a vote from, you know, Leo voter and, you know, some of the other, you know, obviously quote unquote company accounts.
Yep.
In terms of producing, you know, a compensation for them that's not, you know, just, you know, direct payment alone. But yeah, I mean, it just seems like a no-brainer for anyone that's putting out content every day anyway, that's financial related. It's just like, why would you not put it on LeoFinance? Because like, you're going to basically, you have nothing to lose and just crypto to gain.
Right. Exactly.
So it's just a matter about getting the word out. I mean, again, like I said, I did, you know, so, you know, my friend / mentor, you know, he's a stock trading guy. He's got a stock trading community, you know, he's got his Discord channel. He's got, you know, his trading room and group and all that stuff. And he had me come on his mastermind last week that he does every month to basically kind of introduce me and talk about crypto, because he wants me to start, you know, helping them out in terms of, you know, offering crypto education and getting people kind of learned up with not only crypto basics, but even just like DeFi and yield farming, which is great because honestly, like, I'm going to be creating some modules and like, I'm going to create an example of how to get into, you know, a DeFi platform. So obviously, like, I'm going to use like PolyCUB or Cub DeFi as my example in the videos. So those are videos that, you know, eventually hundreds and hundreds of people are going to see as he continues to market and sell his products, you know, through his company, which, you know, he does well. Like, he's got a good chunk of people in his community, you know, in terms of like quote unquote paying customers. But anyway, so kind of digressed with what my point was, but anyway, it just goes back to how many people have never even heard of LeoFinance or let alone Hive. And again, on that call, these people are asking me questions, and my buddy brought up LeoFinance because, you know, he's familiar with what it is because of me. Ironically, he doesn't post on it, which is hilarious because he does 2 YouTube videos per day. Yeah, he does a pre-market kind of like game plan, a post-market. Anyway,
tell him he can earn an extra, you know, $500 a month if he starts posting and engaging on Leo.
I know. Well, I'll get him converted now that we're starting to do some stuff together. But, you know, not a single person in his community knew what Leo Hive was. They didn't even know what Web3 was. And these are all stock traders. So it's not like they're not in, you know, investment related world. So that goes to show you like how little the word is out in regards to these platforms on a whole. Like, I had to explain to them what Web3 was. They never even heard the term before. And these are all like pretty much like day traders, swing traders. So that, which surprised me that no one was familiar with it. I'm not sure exactly how many people were on the call, but you know, it was a nice little chunk. So there's just so much space for expansion for Web3 on a whole, and then obviously, you know, opportunity for Leo. Yes, Crystal Human. That is the new Spider-Man movie, Web3.
That's
Spider-Man,
that's the
Web3.
forgotten Andrew Garfield, third Spider-Man movie.
Yes, there you go. We should turn that into some kind of meme, because memes are what make things popular. We should turn Web3 into some kind of Spider-Man, unreleased movie, and then somehow tie that back to LeoFinance.
Yeah.
Meme gone viral.
Yes.
That's all you need. It's all about
Yeah.
getting a meme to go viral. That's how that's the best marketing, sadly, these
Absolutely.
days.
We need a chief of memes. If you are a public service announcement, if you are a meme expert, we would hire you. We could use someone on the team to create and disseminate good memes. So Crystal Human.
He's Crystal Human saying that they're a meme expert. I need
a
proof.
meme expert.
You know who's actually good at memes? The problem, he's just too angry and bitter all the time. Trump man is pretty good with memes.
Oh yeah, he is. He is good with memes.
I'm afraid to let him out into public though. There you go. I'm gonna message some memes.
All right.
I like it.
We have a potential meme team member. Join the meme team.
There you go. It's like submitting your portfolio. Like, let me see your portfolio of memes. And are they worthy? That's too funny. But yeah, so I mean, per the usual, obviously, tons of progress, 8,000 projects going on.
Yeah.
Which, so to play devil's advocate, and obviously there was some chatter about that in general, is that there are 8,000 different projects going on, and sometimes it feels like it's almost like a jack of all trades, master of none. And it's like, all right, progress is being made, but kind of is it? And it's just like, and are other projects somewhat suffering or not doing as well as they could because there's so many other projects in focus? And I mean, anytime there's more than, I think, even one project going on, those vibes are going to pop up from time to time.
Yeah.
But I think it's a big piece of this, kind of before you get into it, is the overall vision, and if everything kind of ties into that, and mind mapping is obviously a great way to see how this all ties in and how it's all moving in the same direction. I know, like, Walter uses that a lot, and he shares those, like, kind of on some of the calls we're on. So, when it comes to you, and obviously all these different projects that, some easily you can see how they're tied together, and others, like, not so much.
Yeah.
How's this all, like, for you? How does it all kind of tie together, and how do you, basically look at it where you're able to keep the entire ship moving the same direction, so to speak?
Yeah, it's a good question. It's really interesting because the vision, and this might be like a really cool long conversation for the 3-year anniversary of Leo, but the vision when we started was to be a decentralized Web3 seeking alpha. And that was really the original idea, is that we could create a investment blogging platform where people could come in and blog about crypto and stocks, and obviously we tokenized the whole thing, and that was kind of that long-term vision back then. That vision has really evolved a lot, as has the entire crypto industry. So obviously, if you go back 3 years, NFTs weren't really a thing. They kind of had just started being a thing. Splinterlands actually started a few months before Leo, and obviously they were like kind of one of the first to the whole NFT gaming industry. And yeah, when you look at the whole crypto industry, DeFi wasn't a thing, not really. And if it was a thing, it was very small. It was pretty much like MakerDAO and Curve, and probably 3 platforms that really had any sort of adoption. So when you look at this whole industry and how it's changed, our vision has changed a lot too. And my vision for the future of Leo has changed pretty drastically. So I put out a white paper a long time ago about what LeoFinance was going to be, and basically, over the course of probably the past like 18 months, I decided that white paper was insufficient, and we've really changed in direction a lot in terms of where the future is headed. My vision of LeoFinance is, pretty much like a 10 to 30 year plan. And this is all stuff that I've spent, the last 18 months writing about in that Leo white book, which I have been very slow to release because I'm a super perfectionist when it comes to stuff like that. But I do need to release it. And Neil, if Neil were here, he would be telling me release a page a day or something, which I've kind of started to do slowly. If you check it every once in a while, there's a new page on there.
I mean, you could release, although I'm assuming probably sections are probably under that same, umbrella of, not finished and not perfect. So because I was like, specific topics or subtopics, I guess, could be released as opposed to a page.
Yeah. And I need to release it, and I treat it kind of like the edge of like a broadsword, where like every day I'm going back to the anvil, and I'm like shaving down another layer, and I'm making it sharper, and I'm always making it better. So I do need to release it and just keep adding to it, because it's always evolving and always improving.
And that was going to be my point. Like, it's technically never going to be finished, because it's always going to be evolving as the crypto industry evolves, and as the LeoFinance universe evolves. So I was actually thinking the positive of getting it out there is that now you get feedback.
Mm-hmm. Yeah,
which
and I do
would
need
make
feedback
it
on it.
better. Like, I mean,
Yeah.
that gives you the ability to make the white paper better, and more so towards that quote unquote perfection that you're looking for, that obviously doesn't exist, but
yeah, absolutely. But yeah, so my long-winded answer to the question is, all of this stuff ties into this long-term vision of LeoFinance, which I've distilled into the statement that our mission is to democratize financial knowledge and access to opportunities. So, it's like when you look at LeoFinance, which is obviously the base layer, the core, the middle, the meat of everything. It's obviously that Web3 tokenized platform where, we've got the mobile app, we've got Leo desktop, we've got features like the community pages and threads that we're working on. And the goal is to grow the monthly active users. That's like how you measure how we're performing. And as long as those monthly active users are growing, we're kind of on pace to that longer term vision. Obviously, we need to work really hard on growing the monthly active users. At 650 monthly active users, we're obviously so much bigger than 3 years ago and 2 years ago and 1 year ago, where we keep growing, on a very steady pace. But we need to grow more. And that's kind of where everything is at right now. Obviously, the bear market makes everybody feel a little bit different about the direction. And I think that's where a lot of the conversations come from. And in Discord chat is just kind of frustration out of the whole bear market. In reality, the price of LeoVerse assets aren't much different than the broader market. Obviously, some things haven't gone as well as we expected, but you look at that, like I keep saying in that screenshot, the price of Leo is almost identical to the price of Ethereum in terms of percentage drop. So, the bear market makes us all frustrated and makes it hard. But if you keep to that long-term vision, which, I'm always focused on, over the course of the next, 5, 10, 20 years, it is to democratize democratize the entire industry. That, everything is so hard to use. Web3 is impossible to use on other ecosystems. Hive is the most usable one. And on Hive, I believe LeoFinance is the most usable. So, it's really important that we kind of continue on this path of building not just the base to build knowledge, which is LeoFinance, but also the base for opportunities like CUB and PolyCUB. So, building opportunities like that is extremely important. So when you ask that big question about, what's the purpose of having LeoFinance and LeoMobile and CUB and PolyCUB and Project Blank, it's all aimed at that one core mission statement. So if you read that mission statement and then look at each platform, it really is feeding that long-term vision.
but I'm just here for the airdrops.
I know. Yeah, we're here for airdrops and wins.
When Project Blank airdrop.
Yeah, that's funny.
That's actually the funny part is I was thinking of that just now as a meme, but that's obviously more of a just in-house funny meme.
That's funny.
I'm just here for the airdrops.
That was a quick meme. That was a really quick meme.
They are. That's hilarious. Put that together real quick, Crystal
Yeah.
Human. I'm just here for the airdrops. So, I mean, listen, the reality is at one point that probably was the most enticing thing for most people. I mean, especially, 3 years ago in crypto where like airdrops was kind of like what it was all about.
Right.
So obviously, people, because like Project Blank basically is quote unquote airdrop for Leo holders.
Yep.
So, obviously Leo holders are excited about that. So,
Yeah.
but
People love airdrops,
of course
but
they
there's
do.
more to life than airdrops.
Because
But
people love
love
free
them.
stuff, even if
I
that free
know.
stuff technically isn't really value add.
Right.
Because it's at that one moment right up front, it's value add, but then after that, it's all downhill from there. But hey, we're instant gratification. That's how we function.
Yep.
So, yeah, I mean, in the end, critical mass, so to speak, in terms of usership, viewership, and takes a while to get there.
Yep.
But
Absolutely.
and this, all those studies, it kind of shows like that natural growth of user base or community, and how it's grind, and all of a sudden you hit that boiling over point, right? Where all of a sudden you get critical mass, and shit kind of just goes viral, and you get more more users in a month than you did in the prior like 2 years.
Right.
So
yeah, we're just working toward that critical mass. That's a good way to put it. With LeoMobile and everything, it's all just aimed at making it as easy as possible to onboard people. And you could be walking through a conference or going to dinner, and you just whip out your phone. You're like, hey, this is, like, maybe the conversation goes into crypto, as pretty much every conversation about money goes into these days. And you say, hey, there's crypto is a real thing. You can actually use a platform like this and earn crypto and use it for real things, and LP it and use it as like a dividend stock almost. And it's pretty fascinating to imagine what it would be like if you could just whip out your phone and get someone involved in LeoFinance and Hive, in under 30 seconds. And the whole vision behind LeoMobile V1 is to make that super easy. And we've been working on LeoMobile for, more than 12 months at this point. So it's exciting to have that roll out in V1. So it's on Android. I know you downloaded it, and then iOS should be soon, as soon as they approve it.
To vote. Like if I'm away from my machine for a long time, I'll just jump on that to vote. I haven't tried posting from it or anything, just because I prefer, doing writing from desktop, but I definitely have used it to do voting. And the reality is the mobile app, I think, is way huger than people realize in terms of potential impact for onboarding, because one of the things that it does that it's, I don't know, I guess unseen, but so important, is it's the credibility factor. Like these days, like you're not legit unless you pretty much have a mobile app. And people, like, if they can go on their phone and see and go on your, download your app and go on it, and like it's, and it looks good and it functions good, like you're validated, no different than if they're going, if they download Venmo and go on Venmo, right? It's just like, oh, there's another app that blah, blah, blah. And, what's this app for, and how, like, it gives so much credibility. So I think it's particularly important, even though like I'm not going to be a power user of it. I have it now as a tool when I'm out and about and I'm talking to people and I'm at events and things like that. And I can literally just bring it up on my phone.
Yep.
And be like, hey, yeah, this is it. And like, and the fact that they can sign up with Facebook or Twitter, boom, that's huge. Because again, it gives it credibility, because it's like, oh, I can, because they're so used to everything else in terms of their, regular centralized world of, I can, connect through my Facebook, through my Twitter. So it just basically puts you in that category of people feel comfortable with it because it's just like all the other things. So, which is great because it's completely different, but in terms of that stuff, it looks just like all the other things. So, because the point obviously is to, we're not looking to recreate Web 2, so you're introducing people to something new but the entry, the door, the gate looks familiar, and therefore they're willing to walk through it.
Yeah, absolutely. Yeah, you have to have that easy entry point.
Crystal Human's going all out here, throwing in memes.
I like it. I like it. We might have our
warming
new
up.
meme specialist, head of
Web3 killed
memes.
I like it. Web3 killed my Facebook shares, but it mooned my crypto portfolio.
That's funny.
It's funny, awesome. Sadly, not true at the moment with crypto being down.
Yeah.
Probably more than Facebook's down.
Yeah.
But great once Bitcoin, once crypto starts.
Once it goes back.
Again.
Yeah.
So, all right. So
True.
I got about 10, 15 minutes before I got to bounce. So
yeah, let's
do
want
to talk about some general crypto market stuff?
Yeah, let's do a quick rapid fire. So obviously we talked a little bit about Hive and how it mooned. So it went from like 35 cents to 65. It's at 57 right now. Volume is just off the charts, the amount of buy volume. So what do you think? What do you make of it?
I mean, I haven't dug much into it. I just kind of like seen other people's comments and assumed that, it's just another random Korean pump. And that's about as far as I looked into it. I mean, if that's not the case, then awesome. Like, did we finally make it? Did we finally hit critical mass with the Hive blockchain? Because, I only been waiting fucking 6 years, obviously, if you include the Steam time. I mean, again, I don't have a crap ton of Hive anyway, but it's never made sense to me, so to speak, why Hive doesn't get more love. So is this, that, or, but I haven't seen any specific catalyst outside of a Korean pump. If someone was like, holy shit, Hive got listed on Coinbase, it'd be like, wait, what? Okay. That makes sense.
I hear that's in the works.
Well, I saw some comments. I think I saw Krim touch on it, that people have been working on it in the background. The problem is Coinbase is showing a centralized
founder.
Yeah, like there's no centralized.
That's hilarious.
Like, sadly, we need Ned back just for that.
Yeah, the funny thing about Coinbase and these centralized exchanges is that they want a centralized founder for things. So you would think that something that's like akin to Bitcoin in terms of decentralization, like Hive, would be, an easy listing on something like a Coinbase, but it's actually very difficult because Coinbase wants to be able to point the finger at somebody and say, this guy started this. And yeah, it's very funny to see that the reason why Hive isn't on Coinbase yet is that it's too decentralized. But that's how it goes, and DEXs are the future anyways. Coinbase sucks. So I'm good with not having Hive on Coinbase, but if it goes on there, it's gonna moon.
Yes, that's the only reason I want it on there is near-term greed, because eventually centralized exchanges probably won't be a thing. Here's the problem though. Paradigm shifting events, industries, practices in terms of general society, these things take multiple decades. So by the time that centralized exchanges are not a thing, I'm going to be 6 feet underground. So with that said, I would love to see Hive get on Coinbase just so Cat can make money now while he's living.
Fair point, but I do think DEXs are going to take over faster than people think, especially with the collapse of centralized exchanges. I think the next bull run is going to be centered around DEXs and actual decentralization over things like, giving unsecured loans to famous people because they're famous and they say that they can back them.
I 100% agree.
Yeah, I think the democratization, same way that LeoFinance is focused on the democratization of knowledge and financial opportunities. I believe we're seeing the democratization of even DeFi and CeFi and sexes and DEXs. It's all being spread out and the opportunities are being leveled out for everybody. The days of selling order flow and taking these unsecured loans, I think is coming to an end. But fair point that it could take longer than we think, but I don't think it'll take that long. I just posted a little screenshot of the Hive market cap and ranking. Hive is a $250 million market cap project ranked 113. And I think we can all agree that it's very undervalued, which is why, whether or not this is like a Korean pump and dump scheme, which obviously Hive is subject to a lot of times, is kind of irrelevant to the conversation that Hive is very undervalued in terms of market cap. So I own a lot of Hive.
Absolutely.
We talked about it a few times. I bought a huge bag of Hive at 10 cents. And I bought some more, I think at like 35 cents recently or something, kind of like right at the bottom, which was obviously nice. But yeah, I'll keep dollar cost averaging into Hive, and if we ever see 10 cents again, I'm backing up the truck. Because I definitely believe Hive's undervalued in this market.
Yeah, I mean, I think Steam and then especially Hive after the fork have, always been undervalued. And that's what's been frustrating, I think, as a hodler is, holding this coin for years and years and years and be like, all right, when is it going to finally shine? Because I mean, when you compare it to so many other blockchains, it's just like, what in the hell is going on here? Like, why no love? So, I mean, I still have, whatever. I think I'm still a low level dolphin in Hive, but at this point, I got, half my Hive delegated, and then the other half pretty much is already going to the P Hive pool. In fact, apparently I have some more Hive that is liquid that I need to push over because I got some PolyCUB that also unlocked. So more P Hive incoming every week. It's going in. So, but yeah, so yeah, to wrap things up, I mean, obviously, all this hinges on Bitcoin because in the end, it's still the lead dog. It still pushes the market in overall directions up and down. Obviously, you can get these little outlier moves. We're obviously seeing it with Hive yesterday, and we've seen it with coins like Rune and even like Solana when it had its kind of heyday. Same thing with Avalanche. Things can obviously diverge, but in the grand scheme, everything's still following along with what Bitcoin does. So I guess good news is, we got back above 20,000, which was, level everyone was watching. And we've just been consolidating above that for the last week almost. Stocks are down today after getting a modest little bounce. And they were down a little bit yesterday, but, Bitcoin hasn't moved much. I mean, you got these tiny little candles over the last 2 days, and today's candle's barely red, but, it's basically the volatility is drying back up, at least for the moment. So we got, a spike in volume, not that it was a crazy one, and then kind of bottomed out. Obviously, we touched down into the high 17s, but I don't think 20K is the bottom, but there's actually, some evidence that this could be a bottom.
Yeah. So what's your, that's a good way to wrap. What's your general market outlook on, let's say, the next month, 2 months? Where are we at, interest raises and, rate hikes and, Bitcoin price, stock market? What's your general take? Are we still bearish?
Yeah, I'm still bearish, but I mean, I'm not going to lie. One of the reasons I'm bearish is because I really, really, really want to buy crypto lower. So I'm kind of more hoping to go lower just for that reason. But I also know that, me, I look at all the different scenarios so that are, potentially on the table. And, this being a bottom for Bitcoin is technically a potential scenario.
Yeah.
It's not the one I'm betting on, but it's definitely a valid enough scenario. So, I'm not going to discount that, but I'm not going to buy more here because of that. I mean, I did buy, I was lucky. I was buying under 20K, and I bought a little bit, up in like 22.5. So, I'll just ride with what I have. I don't have to use all my fresh powder, so to speak. But yeah, I do think that there's going to be, pain in the stock market, over the summer. I'm sure there's going to be relief rallies like we just got. So yeah, I'm still saying, I don't want to say I'm staying bearish. I'm staying cautious because there's just more evidence of why, we're going to see further sell-offs in the stock market, weakness in the economy, and therefore that should impact crypto, because again, it comes down to inflows and outflows of capital.
Yeah, I am cautiously optimistic. I've been buying Bitcoin slowly every day, dollar cost averaging in. Pretty much ever since we dropped below 20, or pretty much since we dropped below 30K. Obviously, I've ramped that up since we've been below like 22. But yeah, I've been slowly accumulating. I don't know what to make of the market, but I think the Fed's going to walk it back by the end of the year. So Bitcoin could easily end the year, back above 30, 40, 50K. But obviously, it's going to depend on a lot of global factors.
100%. Yeah.
Yeah. So
I think you said it best though. Like, dude, right now, I'm not seeing, I hate making moves when I don't have any clarity, or all I see is kind of indecision. So right now I feel like it's more like guessing, like there's no,
right.
And since I already dollar cost averaged in, it's just like, well, yeah, I could keep DCing if I wanted to, but I feel like at this point I've put in enough capital where now I'm just waiting for the Captain Obvious moment.
Yep.
And maybe we get it, maybe we don't. And the funny part is the Captain Obvious moment can be, higher from here. It could be, all right, we clearly put in a bottom, we just tested a level, and odds are, we can push higher from here. It doesn't mean that we have to like dump down to some ridiculous number. We don't need to crash down to 16K or something. Or, obviously even lower. But everyone's strategy is different based on the capital they have to work with.
Absolutely. Yeah.
So, yeah. Staying with
Cautious
the thesis
optimism.
of, yes, exactly. And, like you said, with the Fed, I think at some point, they're going to reverse course. Me and Neil obviously have been talking about that for quite some time.
Yep.
I'm still eyeballing September, but we shall see. I guess it depends on what happens with the economy and the stock market over the next 3 months.
We shall see. All right. Well, it's been a good one. Glad everybody
We
could make
covered
it.
a lot. Yeah, a lot of action-packed info in regards to LeoFinance happenings. So
Yeah,
your VA should have plenty of clips to pull away.
I'm sure she will. She will. So next week we will see everybody on July 5th, day after July 4th. Cat might be hungover. We'll see.
I doubt that, but it's definitely my live recaps are definitely not going to probably be a thing when Neil's not here. I was putting bullet points in, but like I'm going to go back to that tonight when I can get to it and probably remember nothing. I should have just did like timestamps. At this time we talked about this. At this time we talked about this. I got a bunch of subtopics, vexPOLYCUB, potential of collateralized lending, LeoFinance ad revenues, Leo token inflation, DEX is maybe the star of the next bull run. So cover a lot of good stuff.
Make it from those. Yeah.
Or I could just tell people, hey, this is what was in there. Go listen to the mother lover.
I like that too.
Cool.
All right.
Well, we'll see you all next week.
Yep. Thanks, everybody. See you next Tuesday.
Later.
See ya.